Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of the financial circus. And today we're looking at Bollinger Innovations, and let's just say things might be getting a little exciting. They are talking about delisting, and it sounds like it's a bit of a nail biter. Alright folks, let's dive into what Bollinger Innovations has been up to lately. It looks like they're sending out a current report form 8K on August 26, 2025. Now usually an 8K is for big news, things like mergers, bankruptcies or leadership changes. So let's see what's cooking. So it seems like the biggest news here is Bollinger Innovations is facing a potential delisting from the Nasdaq capital market. Basically, Nasdaq has rules for companies to stay listed, and one of those is about how much their stock is worth in total. It's called the market value of listed securities, or MVLS. For Nasdaq capital market, you need at least $35 million in MVLS. Bollinger Innovations got a notice from Nasdaq on August 26th saying they haven't met this MVLS requirement. They were given a 180-day period which ended August 25th to fix this, so they missed the deadline. Now here's where it gets interesting. They haven't been kicked off yet. Nasdaq says if they request a hearing with a special panel, it will pause any delisting action until that hearing is done. Bollinger Innovations plans to do just that. They're going to ask for a hearing. But here's a little detail that might help their case. Back on August 14th, they mentioned that their stockholders' equity, which is basically the value of the company belonging to its shareholders, was over $2.5 million. Nasdaq has different rules, and sometimes a company can meet an alternative requirement like this instead of the MVLS one. So they're hoping this alternative rule will save them. So the bottom line is that even though they missed the initial deadline, their stock will stay listed on Nasdaq for now. While this appeal process is going on, it's like asking for an extension and hoping the teacher says yes. Now let's look at the actual shares. As of August 29th this year, there were 30,663,625 shares of Bollinger Innovations common stock out there. This number tells us how many shares are available in the market for trading. They've also got common stock with a par value of just a tiny fraction of a cent, $0.001. This is pretty standard for many companies. And then there are these Series A1 junior participating preferred stock rights. This sounds complicated, but basically it's a type of stock that has certain rights often related to dividends or assets before common stockholders get anything. It's like a special class of stock with specific privileges. The currency they're dealing with is US dollars, as you'd expect. And when they talk about quantities of stock, they mean shares. So we know the exchange capital market. This market is generally for smaller companies compared to the main Nasdaq exchange. Now, looking at all this, what's the story here? Bollinger Innovations is in a tough spot with Nasdaq. They failed to meet a key listing requirement for the total market value of their stock. This isn't a great sign for investor confidence because it suggests the market isn't valuing the company highly enough to meet Nasdaq standards. Imagine trying to stay in a club but you don't meet the membership criteria. It's a warning that it's an uphill balance because it suggests the market isn't valuing the company highly enough to meet Nasdaq standards. Imagine trying to stay in a club but you don't meet the membership criteria. It's a warning, however, they are fighting to stay listed on Nasdaq. They'd likely have to move to a smaller over market value of their stock. This isn't a great sign for investor confidence in the specific filing. It's hard to pinpoint the exact cause, but a low stock price and market value is often a symptom of underlying business challenges. Imagine trying to stay in a club but you don't meet the Cambridge statements in this specific filing. It's hard to pinpoint the exact cause, but a low stock price and market value is often a symptom of underlying business challenges. And Mazda to Fraxing for watching. See you next time in our stack panel. A thing to consider.